The dynamic between Fed officials, Michelle, and the markets is nothing new.
No.
But this one seems to be a little bit on the extreme side. Who's going to play out in the correct way?
I always say you want to kind of split the difference, and that's what we've seen historically when the markets in the past, there's been episodes the markets priced in a cut. While the Fed was in the hiking cycle, if you think about early last year, that was the scenario. So I think that the data has been slower than many people had expected early in the year, and it's probably been slower than what probably the Fed had communicated back in their last SEP in March. GDP growth looks to be a bit softer. Job growth has decelerated, and even though, as Philadelphia Fed President Harker had said, we should be realizing a lower break even of jobs as we proceed and as we continue in this business cycle, but it's a deceleration. Early in the year, we were averaging above 200,000 for jobs. We're now averaging something like 120, 130,000 for jobs. So that's the change, and I think market participants are paying attention to that. So my view is that the Fed is determined to continue with the normalization process. However, they obviously could be forced to go slower if the economic data continue to come in weaker.